Welcome back, and joining me with her analysis on what's playing out in the market scene is Annatjie Van Rooyen from My Wealth Investments. It's been such a good week, Annatjie, really pleasantly surprising. More gains on the rand today, and also the JSE ticking up significantly. What's responsible for this buoyancy in the markets this week?
Hi, Annatjie. Yes, there's quite a few reasons for this market of ours that's performing so well. And I think first and foremost is the Trump trade that is unwinding. And that is because President Trump made some comments last night. He's calling for lower interest rates. He's calling for lower oil prices and also lower taxes, as we well know. But he's also taking a much softer stance on tariff increases on China. So that bodes very well for the Chinese economy. That's positive for the mining counters that are listed on our market. But it's not only that. Also on the local front, we are seeing continued reforms, and it has been reported that Glencore and the division of Anglo American might be signing a deal with Transnet as soon as next week. And they committed to spend a lot of money to help fix the rail lines and also to boost the shipments of coal and iron ore. So that gives a nice underpin to the growth prospects of the South African economy, and that is very supportive of the South African currency.
Yeah,
so I think those are the factors that are boosting the market.
Yeah, and I actually see those miners are up quite significantly today. Kumba iron ore up more than 5%. So is Sibanye Stillwater, and African Rainbow Minerals also up by 5%. So it's going to be quite interesting moves to see there in that mining space that has been terribly battered. You talk about Trump calling for lower interest rates, and of course we do have a slew of central bank meetings next week. Do you think that the impact of that could start filtering through from next week, Annatjie?
Well, it depends on which central bank you are referring to. So if we look at the South African Central Bank, we do expect the Reserve Bank to cut interest rates by 25 basis points, which they can easily do because our inflation print came in right at the bottom end of the range, which the Reserve Bank monitors. I don't think that the Fed is going to listen to the president just yet, but it is causing some positive sentiment in the markets, and we probably can expect the Fed to cut by another 25 basis points sometime during the first quarter. I'm not sure, probably March. That's the consensus view at this point in time. And then we're also looking forward to the ECB cutting rates. We've seen the Bank of Japan increasing rates this morning.
Yes.
So they are completely bucking the trend, but they have to get the inflation under control. Also, the Fed, I don't think they'll move just yet because their target is 2% and they're still at 2.9%. So probably the prudent thing to do to pause at this point in time.
Indeed. Well, let's go to the retail space, of course, where we do see the impact of inflation. The Foschini Group coming out with their third quarter 9-month trading update today, posting group sales growth of 8.4% in the December quarter, continuing to gain market share in some categories. Bash, the online app, also doing the things for the retailer. But surprisingly, the share price movement isn't really agreeing with those positive numbers. Last time I checked, it was down more than 3%. Your take on that?
Yes, I also saw that drop in the share price, and I think any pullbacks in these share prices offer buying opportunities because from a valuation point of view, this share counter still offers good value at a forward PE of 13.3. The impressive thing here is that they have expanded their margin by 210 basis points. That is huge. And the latest retail sales numbers came out earlier this week at 7.7%. So that, together with a lower interest rate environment, plus a more stable operating environment in South Africa, plus the stricter tax regulations on the Chinese retailers exporting to South Africa, all of this bode very well for the Foschini Group and the other retailers, and a lot of them are coming out with trading updates next week.
All right. Let's take a look at Reinet, Annatjie, because they came out with an update for the quarter ended December. The investment holding company, they're saying that they've seen an increase in their net asset value, and also talking about funds that they received from BAT in terms of dividends and also the sale of its shares. Would you be bullish on Reinet in this current shape?
Yeah, look, the net asset value has increased by about 8 billion rand in the last quarter of last year, and they've received a nice boost to their cash reserves from the sale of British American Tobacco. So the company now is leaning more towards unlisted investments,
Yeah.
and that should help to narrow that discount. So that definitely counts in favor of the company. Of course, they have strong management team and all the rest of it. The only thing that is not so great is the high management fees and the large exposure now to pension corporation, which is very exposed to the defined benefits market. So, but the fact that they still trade at that discount to NAV and the possibility of a narrowing of the NAV still makes it an attractive investment.
All right. Well, Annatjie, let us get to your stock pick for today. What are you choosing?
I wanted to go with MTN again because I still think there's a lot of upside there, but I've decided, seeing that Sasol has pulled back, I'm going to go with Sasol. So
Okay.
even though President Trump's calling for lower oil prices, I think the sanctions on Russian oil will definitely influence the export of oil to the global markets. And Sasol is highly geared to the oil price and the rand. But not only that, Sasol is also in the process of streamlining their operations. And we have seen last week they have announced that there might be a possible value unlock from the chemicals division. So I'm very excited to see what's going to come out of that chemicals division in terms of possible corporate action going forward. And on a forward price earnings ratio of 2.2 and a dividend yield higher than the PE at 2.6, I'm more than happy to nibble at these levels.
All right. You are braver than most. So thank you so much for your time and for your insights today, Annatjie. Much appreciated. That was Annatjie Van Rooyen from My Wealth Investments.